Hi, my name is Jared Hartman. I'm a small business owner in Orlando, Florida, and I wanted to make a video today about Economics 101 and how economics are important for small and medium-sized businesses. So I've made this helpful, handy-dandy visual aid here for Economics 101, some of the basics. I do watch around 5 to 20 hours a week of PhD level economics videos, content. I do watch professors from Yale, Harvard, other major universities who have been teaching for 40 plus years. I do tend to follow their economic videos. And again, I watch a lot of those videos each week, as well as some of the other, well-known creators of economics videos. So I did want to make a video today. I think I can really condense some of the PhD level economics down to videos that I think that anyone with a high school education would be able to follow simply, and information that could be helpful to small and medium-sized business owners, understanding why small and medium-sized businesses or SMBs are important, and understanding the benefits of being a business owner. I did go to university, and I did receive a bachelor's degree in economics. So small and medium-sized businesses are very important for the economy. In the U.S., small and medium-sized businesses are the backbone of the U.S. economy, or they were for several years. So one of the first terms I wanted to go over is the term bourgeoisie. It can be sort of a scary sounding term, but for example, I've Googled the term many times, but I Googled today the root of the word, and it simply means inhabitant of a town or city. So for example, the Italian Borgia family, they were, the root of their name came from town or fort. So the major town or fort where the city dwellers or the city folk live. So here for Google AI, the medieval meaning referred to people who were neither nobles nor peasants, and it evolved to describe the middle class, particularly those engaged in commerce and industry. Original meaning bourgeoisie comes from the Old French burgess, meaning town dweller. This referred to the inhabitants of fortified towns or walled settlements during the Middle Ages. It is a French term, it is a French term, and small and medium-sized business owners tend to be represented in a class between the working class and sort of what would be considered the wealthy class. So I did want to review one additional term. So the petite bourgeoisie were the French small and medium-sized business owners. A social class composed of small business owners, shopkeepers, small-scale merchants, semi-autonomous peasants, and artisans. They are named as such because their political, economic, ideological stance in times of stability is reflected over the proper higher bourgeoisie or the wealthy class. The term that goes back as far as the revolutionary period in France is political economic and addresses historical materialism. It originally denoted a substratum of the middle class in the 18th and early 19th centuries of Western Europe. The small business owners, or petite bourgeoisie, is economically distinct from the proletariat or working class, which relies entirely on the sale of their labor power for survival. It is also distinct from the capitalist class, the high bourgeoisie, defined by owning the means of production and thus deriving most of their wealth from buying the labor power of the working class. Although members of the petite bourgeoisie can buy the labor of others, they typically work alongside their employees, unlike the high bourgeoisie. Examples can include shopkeepers, artisans, and other smaller scale entrepreneurs. So I am interested in reviewing some of the history of modern small and medium-sized businesses. For Economics 101, the most important concept to understand is how profits are divided. In my opinion, this is a PhD level economics concept, but a concept that can be broken down pretty simply. So for example, ancient Rome, 753 BC to 476 AD, the workers were not paid workers, and that was before feudalism, which is really more modern, a more modern economic system. Feudalism, 580 to 1600, which is approximately the time of the French Revolution, 1789. Feudalism relied on land rent. So landlords owned the land. They also owned everything on the lands, all of the animals, the crops, and also the people and the families on the land. And all of those families paid land rent to the landlords by giving them a portion of their livestock, a portion of their crops. They also worked for the landlord in their fields. And it was also a construct of the church, which was there was a ceremony that was held for feudalism, which ended really with the French Revolution in 1789. And that's when capitalism began, with the Industrial Revolution of 1760. And the main difference between feudalism and capitalism is the concept of profits. And I'm going to play a video now by a well-known economist that'll give more detail there. Also helpful to review socialism is where the government runs the business, like capitalism, but it's government run, generally no profits. For example, the Postal Service, generally run at a loss. Also, there's communism, which has never worked before. Effectively, there's no profits in communism. There's a theory for that, but again, it's never worked in the real world. So here I'd like to play a video from Yanis Varoufakis. He was the finance minister, I believe, of Italy, for the early 2010s. I believe for about 7 to 10 years or so. He's a pretty popular economics commentator. And I think he had a really good video this week. I believe I watched it yesterday about the difference between feudalism and how it transitioned into capitalism.
Under feudalism, you know that very well, you don't need me to say, but just to establish some common ground, under feudalism, all power sprang from land ownership. If you owned land, substantial parts of land, then you had political power, economic power, discursive power, cultural power. Power was one thing. There was no such thing as a division between political power and economic power. If you owned land, then you had political power and you had economic power. And if you didn't have political power or economic power, that meant you didn't own any land. So the great cathedrals, wherever you look at across Europe, in Britain, they were the result of accumulated ground rent. So if you had property, if you had land, you also owned essentially the communities that lived on that land. You had the political power to send a sheriff in and collect at the end of the harvest your share, that's your ground rent. If there were artisans working in your fiefdom, in your estate, you charged them for the right to be working and producing on your estate. So land was the source of power and wealth was accumulated ground rent. All the cathedrals, the castles, the House of Commons were all built on the basis of rent that came from property rights over land. Okay, that's feudalism. What happened with the Great Transformation? I'm not going to go into an analysis of how the transformation took place because then we would need another 2 such sessions for that. But with capitalism, the source of power shifted from ownership of land to ownership of machines. And wealth sprang not from ground rent anymore, but it sprang from profits. So with the Industrial Revolution, the first Industrial Revolution, it was the ownership of the steam engines. The railways. Later, with the second Industrial Revolution, it was the electricity grids and the telegraph poles and the telephone systems. And then later on with the vertically integrated mega firms like Henry Ford's or Westinghouse's and so on. So when we talk about capitalism, what do we mean? We mean a system where power comes from owning the machines that allow you to retain a residual after you've paid off your workers, your banker for the loans you've taken out, the landlord who owns the land that you pay ground rent. What you retain is the profit, and that profit is the source of all power under capitalism. It is this transformation from land and rent to machinery and profit that created the modern world, that created the hegemonic power of the United States, let's say, today. My point now, in this talk and in this book, is that something quite remarkable has happened to capital.
And here, Yanis is going to go into his theory of how he believes we're moving back towards feudalism. So for Economics 101, I did want to go through sort of how the change from feudalism, where we had land rent, to capitalism, where we have profits. So feudalism, a social, economic, and political system in medieval Europe, where land was granted by a lord to a vassal in exchange for military service and loyalty. Again, there was a ceremony that took place before the church. And that really ended with the French Revolution, inspired by the American Revolution. The French Revolution was a period of political and social upheaval in France, started in 1789, driven by financial crisis, social inequality, Enlightenment ideals. And the ideals are where really things changed from serfs, people being serfs, to being able to be employees, and to have to be able to sell labor, and that's what labor is sold to capitalists, and that is the basics of capitalism. And again, here's a helpful AI Google search results for the Industrial Revolution. The Industrial Revolution was a transformative period in modern history, primarily in the 18th and 19th centuries, during which agrarian handcraft economies shifted to ones dominated by industry and machine manufacturing. When fixed assets and equipment are purchased, they're recorded on the balance sheet and capitalized, meaning they're depreciated over a useful life. For example, 5 years, 7.5 years, 15 years, and the accounting principle for matching is used, where we match the expense with the income that was derived from using that expense in the year that the income is earned. And again, the Industrial Revolution really changed the main economic system from land rent to now profits, or businesses with a profit motive. And again, we'll see here under this economic system, for example, the post office, the postal service, which is government run, effectively run at a loss. There's no profit motive. And this last economic system has never worked in real life. It's a theory that has never worked, and there's no profits. So with capitalism, there are employees and employers. There are also employees and independent contractors. I've worked with well over 8,000 small and medium-sized businesses. Some had revenue of 1,000, 10,000, 100,000, 1 million, 25 million, a wide range of businesses. And I would say nearly 95% or more of those businesses did at some point have the question of, is my worker an employee or an independent contractor? Am I, as the business owner, or an employee of the corporation? Am I a shareholder? Those types of common items are very common. They have a lot of impacts as well. And for example, here, independent contractor versus employee. So this is an article from Forbes. It says, let's take a big picture look at this inquiry. We can break employee versus independent contractor questions into two categories, financial, and the other category is business. An employee only has to pay the employee part of FICA, Medicare, etc. An independent contractor must pay the higher self-employment tax, which is the employee and the employer portion of FICA. It's on only 92.75%. Just to confirm, let's see, 100 minus 7.65, 92.35% of the independent contractors' profit is subject to the employee and employer portion of FICA. Goes into some additional features. And for business, an employee will likely have to assign any intellectual property created during employment, such as patents, to the employer. Yep. And it goes into some additional features. Okay, so for Economics 101, now that we've reviewed capitalism and the employee-employer relationship, it's helpful to review capital, define capital. According to Google AI, capital is wealth or assets used to produce more wealth. So effectively, capital is profits from the business that is not needed to be paid out in the form of expenses and costs that can be used to create more profits. So effectively, it's a business's money that is able to be used to make more money. So I did want to review for small and medium-sized businesses why I believe small and medium-sized businesses are so good and why they're important. As a smaller, medium-sized business, the business owner or business owners are going to own the equity of the business, which does tend to be more beneficial. I found a website here, a helpful website that has a profit and loss report example. And for me, a profit and loss report and a balance sheet's really helpful as a visual aid to show how the profit of the business, the sales relates to the profit, and almost like an algebraic function, the profit and loss report. So for example, I have here in algebra, a function is a rule or equation that shows a relationship between an independent variable, an input, or x, and a dependent variable or output, y, and really the relationship. So if we have, start with the profit and loss here, we have gross sales at the top of the report. Those sales go through and have expenses deducted. At the very bottom, we have net profit, which is carried over to the balance sheet. I found another balance sheet report example here through another helpful website. Starts in the first area, the cash and cash equivalents, which is where we'll see assets such as the business bank account. So we have those sales, we pay for those expenses, we have cash left over in the bank account, and we'll see that the assets are represented all the way through the balance sheet. And again, the very bottom line of the balance sheet being stockholders' equity. So it's the stockholders' equity portion of the balance sheet that makes being a business owner, a small business owner, a medium-sized business owner, makes that being a good aspect of economics and Economics 101. So I did want to end an Economics 101 video with a brief video from the last year or so of very highly respected author and economist Jim Rickards. This gentleman, this economist, is sort of trains the U.S. government. This is the the economist that the U.S. government uses. Good information, I would say, to review for anyone who's trying to understand Economics 101, the benefits of starting a small to medium-sized business, and really having a good idea of what's been going on in the last 15 to 20 years in the economy. Here in this video, he's going to effectively make the case that the U.S. economy is currently in a recession. It's in a recession that is inside of a depression that has been in place since 2007, which is something I'm in agreement with. And here in the beginning part of the video, he goes into the 1970s when there's a funny story that he and many other economists tell about France driving there, visiting the island of Manhattan, and literally wheeling gold from the reserve to their ship when we changed the gold status in the 1970s. But then he does go into additional information on how he sees good things in the near future.
To some extent, yes. And it's 2010 was an inflection point. So if we go all the way back to 1970, the United States had 9,000 tons of gold. We go all the way back to 1950, we had 20,000 tons of gold. We had almost all the above ground official gold in the world. By 1970, we were down to 9,000 tons. Where did those 11,000 tons go? Well, 2,500 to France, 2,500 to Italy, 600 to Japan, 700 or 800 to the UK. And those our trading partners ran surpluses. They took the dollars and bought gold. We shipped the gold, and they put it in their reserves, and they still have it. Germany was over 3,000 metric tons. But by the early 70s, there was a run on Fort Knox. The French actually sent a Navy vessel to New York to pick up their gold and take it back. They wanted a naval escort to take the physical gold back to Paris. So that's why Nixon closed the gold window.
And many people may not be aware. The French Navy physically on a dolly wheeled their gold down the sidewalk of Manhattan and put it on their ship and drove it back to France.
You can find that speech on YouTube. He said, "We're temporarily closing the convertibility of foreign reserves into gold." And what they wanted, and I spoke to two of the people who were at Camp David that weekend. Ken Dam was later dean of the University of Chicago Law School, and Paul Volcker, who became head of the Fed, but he was deputy treasury secretary at the time, so that's why he was there. But two of the people that I spoke to both of them, they said, yeah, we thought it was temporary. We were going to have another monetary conference. We were going to devalue the dollar against gold, against other currencies, and get back to the Bretton Woods system. Well, they did have the monetary conference, Smithsonian Institution, December 1971. They did devalue the dollar or gold, a dollar against gold, from $35 an ounce to $38 an ounce, later $42. They did devalue the U.S. dollar against the other major currencies, Japanese yen, the Deutschmark at the time. There was no euro, about 12 to 16%, depending on the counterparty. But they never got back to the gold standard. They did all the stuff they said they were going to do. What happened was, in the meantime, Germany was so sick of defending the dollar that they just went to floating exchange rates. They said, this is what the market decided, and we've never looked back. We still have floating exchange rates to this day. But from then on, central banks were net sellers of gold. The U.S. sold another 1,000 tons in the 70s. We went from 9,000 to 8,000, 8133 to be exact. In the late, and then we stopped selling gold. There's a reason for that. We don't have time to do it today, but maybe on some other podcasts I explain why they just stopped selling gold at that exact number, 8133.
So I did want to move over to another part of the clip from Mr. Rickards. I may have conflated two parts of the clip in a different part of the clip, but I did want to move over to this other part where I believe the best review of the current economy and how it affects small and medium-sized businesses is reviewed, in my opinion.
I don't think it'll be stagflation, because stagflation is the combination of really weak growth with inflation, and we did see that in the late 70s. That was stagflation. You had 10% unemployment and 15% Treasury rates. Let's say, wait a second, I thought they were inversely related. If unemployment was high, interest rates are going to be low, and vice versa. Not in the late 70s. I mean, you had sky high unemployment and sky high interest rates. That was stagflation. We're going to get higher unemployment, slower economic growth. It's going on all over the world. The U.S. is maybe the last one to feel the full impact of it, but Germany hasn't grown in 3 years. The UK is heading for a recession. Japan has had 9 technical recessions since 1990, what I would describe as at this point, 35-year depression. And economists don't like to use the D word, the word depression, because they like everything has to be a number you can fit into a closed form equation and so forth. Recessions are defined as 2 or more consecutive quarters of declining GDP. So they like that. It's got a math component to it. Well, what's a depression? People say, well, gee, if a recession is 2 quarters of declining GDP, a depression sounds worse, so that must be 10 quarters of declining GDP. No, that's not what a depression is, and I'll use John Maynard Keynes' definition. He said a depression is a prolonged period of below-trend growth with neither a tendency to get back to trend nor a collapse. Meaning, if your growth potential in the mature economy like the U.S., 3.25% is very doable, but you're growing at 2.2% from 2009 to 2019, so end of the financial crisis, to just pre-COVID, compound annual growth was 2.2%. But if your trend is say 3.5%, or say 3.25%, so think of it as a wedge. Here's the trend, and here's the actual. There's a wedge. That's lost wealth. That's now into the tens of trillions of dollars of lost wealth. So I would say, and I have said, we've been in.
This is why in my opinion, it makes it's a good opportunity to start a smaller, medium-sized business. There's good opportunities there.
Depression since 2007, a long depression. Some people call it a silent depression. It doesn't mean that the economy has been declining the whole time. It does mean that we never got back to trend. In a typical recession, again, there's this trend line. So a recession comes and growth drops, okay, but it goes back to the trend, meaning there's a timing difference, but you didn't actually lose any wealth. There was, because in getting back to the trend, you grew faster. So you went down 2 or 3%, you came out of it, you grew 5 or 6%, and you got back to the 3% trend line and you kept going on. What happened after 2008? We never got back to trend. We dropped a lot. That was a big technical recession. And we started growing again, but the new growth trend was far lower, a lower trend than the old growth trend. We never got back to that trend. So that lost wealth is permanent. And that's different. That is what a depression looks like. So I would say we've been in a depression since 2007. Japan's been in a depression since 1990. It doesn't mean you're always in a recession, but your growth never gets back to what it was.
Now, is that kind of when you compare unemployment to underemployment?
Yes. I mean, unemployment is a good measure, but unemployment tends to be the last thing to fall apart. When you think about it, when you run businesses and you hire people, you spend a lot of time and effort hiring.
So I believe that's the best economic analysis I've heard, and the one that I agree with. I think it's a good time to start a smaller, medium-sized business, especially here in 2025, if there's an opportunity to do so, and certainly I'm a small business owner. SMB Bookkeeping is able to help out with setting up bookkeeping. First month free, get everything set up effectively for free. So if someone's interested in starting a smaller, medium-sized business, definitely a good time. So I did also want to say, for anybody who might be interested in SMB economics, I do have an SMB bookkeeping YouTube channel where I go through helpful information for simplifying payroll, simplifying bookkeeping, a lot of those common tasks. If for anyone who may be interested in starting a small or medium-sized business here at the end of 2025 and going into 2026, I would say is a good time to consider that. And I have some helpful services there. Effectively, the first month is free. Getting set up is free to help the business get all set up and going in the right direction. Thank you, and I hope you have a nice day.